Myself, Vaibhav. If we consider the market conditions prevalent in the day, we can see that the markets have been in a range bound, in a way even jittery for the most of the European trading session, and the undertone is slightly bearish, but there is no big move, not as of yet now. But I feel if we don't really see any headway happening in the US trade US stimulus stocks, then I think we can expect the S&P to even crash below the current consolidation range and head towards 3,400 levels. Now, coming back to the fundamental data which we have got so far, we got these UK CPI and retail sales numbers during the early hours of the European trading session, and both of these releases are pointing to the improvement in the UK's economy. The numbers are still far off from the pre-coronavirus days, but there is some improvement, and I think this rise in the CPI is significant. We saw for the month of September the inflation rate rising to 0.5%, which was almost more than double the prior level of 0.2%, and this is in terms of the year-on-year level. And also the retail sales have climbed substantially, and now in terms of the year on year, the numbers for September are indicating the rise of around 1.1%, which is also pretty better than the prior release of 0.5%. And apart from that, there were not many releases for the European session. And coming to the North American trading session, we don't really have much on the data calendar for the US session. Apart from this crude oil inventory data, and if we consider the other major economy in the North America, which is Canada, we have just in a while we will be getting the inflation numbers, the CPI reading for the September, and we are expecting the CPI to be around 0.3%, which will also be greater than the prior release of 0.1%, and this is in terms of the year on year. And at the same time, the retail sales numbers are also going to be released. And here also, we are likely to see the Canadian economy doing well as more people are stepping out and spending. So, because of that, we might see the retail sales rising 4% in terms of year on year for the month of August. Now, turning to the commodity segment, we will be getting the crude oil inventory data, and for last couple of weeks, we have seen continuous drawdown in the US crude oil inventory, and this trend is likely to be sustained in the last week also, and we might see the crude oil inventory reduction of around 1.02 million barrels, and this will be also on back of almost 3.8 million barrels of drawdown which we saw in the prior week. So you can pretty much expect the crude oil prices to stay firmly above the US dollar 40 per levels. For last couple of sessions, the US crude oil has been able to hold above this crucial level, and if we see further crude oil inventory reduction, then I think this is likely to support the oil prices, and we might see the oil prices moving higher in coming sessions. Now let's turn our attention to the technical segment. Here we will first see the S&P 500's technical outlook. Then we will turn our attention to the USDJPY. Yesterday's projections didn't really come true. Actually, we saw the inverted move, and instead of moving towards 106, we saw the USDJPY cratering below 105, and now I think we have almost seen the reversal of the trend, and we should be getting ready for the bearish stance in the USDJPY. So we will see how the projections have changed in a day's time in the USDJPY once we are done with the S&P 500's technical outlook. This is the daily time frame chart, and here the S&P 500 was rising steadily, starting close to US dollar 3,200 and going all the way above US dollar 3,500. But then onwards, we saw this S&P 500 entering into the consolidation phase, and it has almost corrected around 2.5 percentage point. The 100 points move has already happened, but as I said, the move has not really been big in terms of the single day move, and the manner in which we have seen these incremental losses. I think this has happened because the underlying momentum was on the bullish side, and this is being considered as the correction which is due, and because of that, we haven't really seen any big move of the turnaround, not as of now. And I think even now we have to be cautious, and that's why I am not saying that the USDJPY has entered into a bearish zone, but a lot is going to depend on how the US stimulus talks pans out between the Democrats and the Republicans, and lot is going to be dependent on that. So to deal with the uncertainty, we will have to rely on the key technical points, and coming to the pivot point series, we saw the reversal starting closer to these first resistance of this month's pivot point series, and from there onwards, it has been the formation of lower highs and lower lows, and gradually the S&P 500 has continued to decline, and now for today's session, even during the European trading hours, we saw the decline of around half a percentage point, and even now the stance is looking bearish. But we of course have to keep in mind that these two technical indicators, the regression curve and the pivot point series, are not exactly bearish, but I think from short term perspective, we don't really have to look for the long trades, and rather than that, we can adopt a scalping kind of approach where I think the more weightage should be given to finding the short sell trade with the possible move coming towards this central pivot point, which is there around 3380. So if we are going to rely on this trajectory of slightly bearishness, then I think we will have to use this immediate resistance zone of these SMAs, and then the prior swing lows, prior swing highs. So taken together, we have the resistance zone in place around 3470. Right now, the price is almost more than 1 percentage point away, and because of that, we are not really going to get the entry straight away for this trade. But maybe if during the latter hours of today's trading session, if we see that the S&P 500 has been able to consolidate and show some retracement, and then if we see the fresh selling opportunity anywhere closer to this resistance zone or the prior swing highs and these SMAs, then I think we should be looking for the fresh short sell trade while keeping the stop loss around 3500, unless and until there is a significant break above this 200 SMA, which is there around 3485. I am not really expecting any big turnaround in the fortunes of the S&P 500, and this bearish stance is likely to prevail. And as I said, we can target the levels of around 3400 in coming sessions. So if we are going for the short sell trade anywhere in the price band of 3460 to 3470, with a stop loss coming closer to 3500, we can pretty much target the lower levels around 3400, and there we will have the risk reward ratio also in our favor, with the risk reward ratio coming around 1 is to 2. Now let's shift our attention to the currency segment, where we will see how things are shaping up and how this swift turnaround is making the projections go haywire, and we have to adapt now the new approach. So yesterday's projection, as I said, went out of the window, and now we have to change the stance. And here I think this formation of lower highs is clearly is in play, and we have to figure out the possible short sale moves which might take the USDJPY eventually closer to the immediate swing low, which is there around 104. Right now the USDJPY is trading close to 104.9, and as you can see from the move which is being captured in this single candle of today's, we saw sharp move, a big move, and because of that now the projections have turned bearish, and it will be prudent for us to look for short sell opportunities as the larger time frame charts are showing continuation of the bearish stance in the USD So we don't really have much of an option but to look for the sell trade, going for a buy trade while this price decline price decline is fairly strong. I think would be akin to trying to catch the falling knife, and we shouldn't be taking that risk. So here we have to rely on this central pivot point, and which we can utilize as our crucial marker. So as long as the price is concentrated below this central pivot point, we can continue to look for the sell trade. And I think if we get the fresh entry closer to or anywhere below this central pivot point, that would be an excellent opportunity to go short while keeping the stop loss just in the vicinity of prior swing high, which is there around 105.70, and that will give us the risk reward ratio which will be pretty much favorable, as we will be in position to go for the target of around first support of these months pivot point series. And as I said, the stop loss is not going to be much wide, so for a entry anywhere in the price band of 105.3 to 105.40, we will be in a position to go for the stop loss of around 105.80, and in lieu of that risk we can target the areas closer to these lower support, which is far away around 104. So here we also have to take into consideration this regression curve, which has now flattened, as we didn't really see any sustained big move towards the upper side, and because of that we saw this flattening of the regression curve. And as the price action has moved to the lower band, we can pretty much expect the USDJPY's regression curve to slightly bend on the downside in a session or two. And in such scenario, we have to utilize this confluence zone of 50, 100, and 200 SMA, which is there around 105.40. As we saw in the 4 hourly chart, the central pivot point resistance zone is also there, and now on the lower time frames, we have this confluence zone of three key SMAs. So taken together, we have this strong resistance zone, and because of that we can continue to look for any fresh opportunity to go short in the USDJPY if and when we see the price action in a possible move towards this resistance zone. Right now the USDJPY is kind of far away, and we can't really say if it is going to go back towards our desired entry point or not. But after this sharp fall, this is not the time to go for the fresh short sale trades, and rather than that we can adapt the wait and watch approach and allow the convergence of these SMAs and the price action, and then in due course of time we can indeed look for the fresh short sell trade while keeping the target closer to the 104 area. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.